I like Monday nights, Larry, because this is I know another time. I don't know how many times in a row now when we've had really good Tesla stock action on Monday. So, hello, Larry Goldberg. Glad to have you on board. How you doing?
Doing great, Randy, doing great.
All right. A lot of times we talk about why Tesla moved the way it did today. I think it was partially reaction to how it moved on Friday and partially people getting over some of the negative news on the other EVs. Uh, 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 uh,
I think that the market is beginning to awaken to the promise of the bot.
oh, okay.
There was this very big announcement over the course of this week that Figure.ai is getting almost $700 million from the likes of Amazon and Microsoft.
Lucid, I
This
mean,
is not,
yeah, yeah,
this is not trivial news. And if a company that has no revenue is 15 or 18 months old, less than 18 months old, no revenue, just in the development stage, has a valuation placed on it of $2 billion, gets almost $700 million from the leading players in AI, then suddenly all this noise that Elon's been making about Optimus gets a validation that's at a different, entirely different order. Now, I could be wrong, and it could drift back down again or whatever, but I think this is a wake-up call.
By the way, I agree with you 100% and even said that. I think it was on Thursday,
Really?
right after the announcement. It was like, this should be a validation. This should cause the people who are the institutional investors, et cetera, to at least have to take a look and say, do I need to be on this train?
It's incredibly difficult for institutional investors to value Tesla. I was listening to or reading what Gary Black was saying. I'm a fan of Gary's.
Right.
As an institutional investor, he's about as alive to the reality of what's happening in technology as any other investor, as any other institutional investor. But like all other institutional investors, and he posted about that today, he's got to see some numbers. He's got
Yeah.
to get, he's got to get something he can put onto his spreadsheets. It's very, very difficult for him to take a bet or make a bet or place a number on a bet on some future where there's no quantification.
Right.
And there's no TAM for robots.
Right.
There's just no TAM for robots. There's no TAM for FSD.
Right.
There's no TAM for robotaxis.
There's no TAM for energy.
I was going to add that too. So it's very, very difficult now. Reluctantly, but recently, the institutions have started to put some value on energy. But they don't understand the hidden value of the margin or the hidden margin that's about to hit that's going to be increasingly hitting the revenue, hitting the P&L
Right.
of energy. I've spoken about this
Sure.
before. I've published about it. So they're looking at the P&L, and energy's earning a miserable under 10% margin.
Right.
And so they're allowing a few extra points of margin. Actually, energy is going to be closer to 30% margin
Right.
as these deferred profits start kicking back in. So, energy is great. And then, of course, they can't evaluate or value the possibility of bots and the possibility of, the FSD and Dojo. Now, some analysts make brave uh, guesstimates,
Right. Mhm.
as we would do,
Right. Right.
and certainly as anybody in the venture business would do. And that's a reasonable assumption if you're prepared to put some odds on it. But it's very difficult
Yeah.
for the market to do that if the analysts aren't actually validating it.
Yeah.
But what we're beginning to see is a creeping realization. And once that realization starts, becoming more and more to the forefront of people's consciousness, I think we'll see an adjustment.
Yeah.
So AJ at ALOJOH posted tonight his estimates of earnings for the next couple of years into 26, 24, 25, and 26. And he's a very good analyst. And amazingly enough, his numbers are very, very, very close to mine. I've spoken again and again about the big transition taking place in 25 and realization in 26. So I take that as a lot of validation because he's very solid. So bottom line is maybe the market's beginning to wake up, and it's going to happen in very, small stages. And they're going to be, periods where the Tesla Q or the analysts are going to, upset people, or there's going to be some meme that Elon posts, and everybody's going,
Right.
But I'm pretty confident that we're going to see, a very significant move in the share price by 26.
We also saw the very first mainstream media pieces on Cybertruck over the last 4 days.
That's right.
I think that could have had an impact this morning as well, because until it's in the Wall Street Journal or the New York Times, it doesn't exist. And the Wall Street Journal was one. I forget who the other one was. Right?
Daniel of the Wall Street Journal, man. He's one of my favorite.
Very good writer. Very good.
And he wrote just a great piece. Yeah.
All right. Well, speaking of mainstream media, I reported last night on a CNN story that added a bit of nuance to the debate about the cutting prices versus the using the money for advertising that we talked about all last year. And I'm just curious to hear your take. Tesla grabbed massive market share. The idea here is that Tesla grabbed market share early on, the first 14 years or whatever, in the $40,000 to the $100,000 space. All right. In fact, I doubt very many people had even a clue that they would grab as much of a percentage of that business as they did when you had such great competition from Japan and from Europe, even from the United States. Everybody was in that space from the 40,000 to 100,000. Anyway, but the argument would be that while there are still folks to be won over in that price range, especially in the Midwest, as we've talked about before, taking it from ICE vehicles or from failed EVs, Tesla was maybe Elon was thinking they were getting close to the runway was running out in that $40,000 to $100,000 range, and they needed to do something besides the Gen 3 vehicle. They needed to get the price of the Model 3 and the Model Y down to where they could grab more share. What do you think?
It's not just look, you're singing my tune.
Okay.
Not besides the Gen 3 vehicle. Here's the reality. The Gen 3 vehicle is not going to be sold before the end of 2025.
Right.
You got 3 massive factories, 4 massive factories if you include Fremont, pumping these things out. You have to sell them. And with all their price discounts, with all the dropping of the price, with all the, tearing of the hair, they're still earning a higher margin than all these other vehicles that are priced similarly to them in the marketplace. What can people be thinking? Somebody posted tonight something about, yeah, but if they kept their prices, they'd be making $30,000 a vehicle. And I posted back, yes, and they sell 2 of them.
They'd be selling as many as Lucid.
That's the point. So, it was one thing when they were unique. Nobody was making anything like it. everybody had, everybody had to have one. There's no doubt that the early adopters really stretched themselves to buy those cars. I mean, I didn't stretch myself because I was driving, high-end cars, but and my neighbor also, a younger family than we are, but both professionals, both really good earners. They were driving high-end vehicles, but they were happy to go out and buy a Tesla. Well, that market, the total volume of that market is tiny compared to the volume in the middle market.
Right, right.
It,
And there's some people, and there's some people that 40,000, over 40,000 is a non-starter. It's not even worth conversation.
not some people, the majority,
Right, right.
by far the majority of people. So you can build a really nice, look at Mercedes and look at BMW. They built a really nice business at the top end in the 3 million plus vehicle market. And I've heard really very experienced auto analysts tell me, yeah, Tesla's going to be another Mercedes or BMW. They'll top out at about the 3 million mark, 3.5 million mark, and that's it. So in order to actually build the volume, they're going to have to, and I've said this on this program, something else, they're going to have to expand the TAM of whom they're selling this vehicle to. And the TAM at, the $60,000 and up price level is there. And the TAM at the $40,000 and below price level is like there, huge. That's what they're doing.
So there's a profitable section of that group of people. There's a very profitable section. I was in it. Okay, even though I was a high earner, I had 4 kids, and my wife, she was a stay-at-home mom, and so I wasn't. Well, okay, sure, I had a couple of Jaguars and a Cadillac, but anyway, generally speaking, I was looking at the sports cars in the range of the Dodge Charger or Challenger, the Camaro, the Mustang. Those were the vehicles that I liked. I've been driving this Volvo 300 horsepower car, a little more expensive than those, but to me, that used to be a very, very big market. All of a sudden, Tesla's coming out with their Model 3 Performance, which is either going to be a Plaid or it's going to be a
Ludicrous. It's not Ludicrous. Ludicrous. There's nothing faster than a Plaid. You can't. So the model, the S is a Plaid,
right,
and the X is a Plaid, but
this will be a Ludicrous
because they have 3 motors,
right.
So the performance, what was the performance of the 3 is going to be a Ludicrous.
So it, to me, might pick up that market segment. I mean, if I was 5 years younger, there'd be no question about my buying that car. I mean, I'd just be waiting. I'd be putting my name on the list right now.
Right.
There's a lot of people that are 5 years younger than me. Is there still a market for the performance? And if it could be,
yeah, it'll sell very well.
Yeah. So that could be a profitable addition to very profitable addition to the line.
Sure.
Yeah.
Sure. I mean, look, Tesla is straddling the high end and the middle market. And I'm not sure they planned this all. I think that in the original plan, the next gen would have come a year and a half earlier, 2 years earlier. Then they would have kept the pricing of the high-end cars where they were. They would have brought out the next gen, and they would have straddled from that $50,000, $48,000, $45,000 level down. I don't know what the exact. I'm not a marketing thing is, but yeah. So they have to play the hand they're dealt, and there's no doubt that if the pandemic had not hit, the Cybertruck would have been a year and a half earlier. Gen 3 would be coming out now.
Yeah. So let's talk about the robot just a little bit more.
Yeah.
So we've had a bunch of stuff happen with the robot over the week, not just this big investment by a bunch of different companies in the figure, but we've also had, I don't know, at least 3 more videos, a couple from Figure, one from Optimus, I think one
from a robot working in BYD,
yes.
in a BYD factory. Was it a BYD factory or a Neo factory? BYD factory.
We actually, I think they said it was definitely working in a Neo, and they thought it might
Yeah.
also be in BYD.
Okay.
Right.
So
So,
I have a comment to make.
okay, go ahead.
Will you ask your question? Because I think this answers your question. Kind of, I think, look, if you look at those videos, if you don't just say, gosh, gee whiz, wow.
Yeah.
If you look at those videos, none of those bots, whether it is Optimus walking around the floor, whether it is the figure bot so-called doing, work, or if it's the Chinese bot, I forget the name of the manufacturer, doing the inspection, you have to say to yourself, well, gee whiz, but they're working at 10% of the speed of a human. They're not really quite there. And you looked at the Chinese one, it was very off. If you looked at the figure bot, it was working at, I think they actually put their 16% of the speed of a human. And if you look at Optimus, it's a big improvement in the walking, but it's still, less than a third of the speed of a human walking. What I'm trying to say is people don't realize that for all the gee whiz, this is very early.
Yeah, so I have another version of that story. So number one, I don't know how long it'll take to speed them up. That's gonna be my main question I want to ask Scott on Wednesday. But the other side of it is the conversation all week has been about, is Tesla waiting to have it be more general purpose as opposed to being able to do specific tasks?
No, I don't think so.
You don't think so? Okay.
Why would they? I mean, the sooner you can get value out of a good, the better, because money now is more valuable than money in the future. You don't put look, they launched FSD before it was even capable of driving down the freeway. And now you're saying they want to come out with the perfect, no, because firstly, the problem that they're tackling is more difficult than FSD. So that's very sobering. It's taken them 5 years to get to where they are with FSD, which I have to tell you is really, they're doing great stuff.
Yeah.
FSD is looking really, really good. But you can't seriously think that they would hold back value in order to do something, quote, generally, because there's no such thing. There is such a thing, I guess, and that's, artificial general intelligence. They're not going to reach artificial general intelligence. It's going to be specific for a very, very long time. Okay. And so as soon as they can get value out of it, they will actually deploy it.
Okay.
But when you're working at 15%, 20%, 25% of human speed, that's not where you need to be. Look, I did the numbers. And in those spreadsheets that I published, I showed that the bot working at human speed has a very high profit margin at a competitive price to the human being.
Right.
But if you take 16% functionality, you're way, way below what it's costing to pay to hire a human being. Yeah, you could perhaps put them in a very dangerous environment, but then at a 16% speed or a 16% reliability, you don't want them in that dangerous situation.
All right. So my question for Scott will be the big question. is how fast does he think that they will move in terms of improving the speed of the walking and the speed of the ability to do the tasking? That would be the question. All right. So Rohan, so it's really cool that Rohan is coming on all the time now and talking to us. Do you think the fact that he's talking to us a lot replaces or helps with the fact that Elon talks more about politics and X and stuff than he does about Tesla? Or do you think that we really badly need Elon back talking to us?
No, I think Rohan is a great spokesperson. You know, he has all the smarts. He's such an intelligent person. He is such a such a solid, you know, manager. I think he's great. I have huge respect for him.
Well, today he said, well, it was kind of interesting that he came out with this post today because I did a big thing with Brian White on competition. In fact, today and tomorrow is going to be about competition. And he said, every new EV model from any brand contributes to the Tesla mission and is celebrated internally as contributing to the acceleration of sustainable transport. So this is what I've been saying all along. I know that it's fun. I think as humans, especially men, we love to compete. We want ours to be the best. And but the reality is that we need some of these other companies to win. Not beat us, of course, but to do well. How's that?
Yeah, I mean, you know, I'd love to see Rivian succeed. I'd love to see, I mean, even Lucid, I'd love to see them succeed. I'd love to see BYD. I love to see BYD succeed. You know, I'd like to see some of the European manufacturers succeed. I think it's going to be, look, it's going to be tough to compete against Tesla. And it's going to be tough to compete against the Chinese manufacturers. But, you know, that competition is what drives quality. So, you know, I'm 100% aligned with him and what you said. And you know, I think we can all say grace over that.
There you go. So Berkshire was out today. Of course, this is a day that a lot of people wait for, even as much as they wait for Elon to say something new, because they put out their letter every year. A couple of the headlines I saw said that he seemed in a dour mood.
Well, you know, you have to think that Warren Buffett has just lost his partner of, I don't know, half a century. You know, there was such good people, and so, you know, I mean, I understood this was going to happen, that he was going to be, you know, a little down. He himself is getting on. You know, we can't, yeah, it's very hard for me to think that he's 20 some years older than I am. It's very hard because you know, he comes with such an incisive intelligence. But, you know, I mean, what can I tell you? Listen, Berkshire's going to have to be broken up.
Okay.
He said it. He said, look, there's nothing we can buy.
Yeah.
Nothing will move the needle. Nothing we can buy. Bulk of his assets, not the bulk, but a very large percentage of his assets are in cash. And his biggest asset is Apple. He didn't mention them once. Not once.
Yeah.
So it's hard to see how his successors can expand the company. He said in very simple terms, there's nothing in America that's large enough to move the needle for us that hasn't already been picked over by us and
everybody else. Yeah, right.
What can I tell you? I mean, look, Berkshire has not ever focused on the new. They've always focused on the old.
Right.
And here's the reality. that it is the new that is going to move the needle at all. What Berkshire did was ride on the massive epoch-making growth of the late industrial era.
Right. And did it beautifully.
And nobody equaled him. However, those assets are functionally dying assets. That whole company is built to create molecules and to move molecules. It's now all about electrons and moving electrons.
Yeah.
And so that transition is taking place right now. And, these legacies last for a very, very long time, and they'll pay a lot of pensioners, a lot of, living wages. But the world is changing, and we are beyond the late industrial stage. We're into a new stage. It's the world of AI. He didn't mention AI once. I listened carefully. I looked, I read not a word about AI.
Yeah.
So, peace, Warren Buffett, peace, but it's time to move on.
So, Larry, you know that I have maintained for quite a while that the interest rates are not that high. And they're not that high. You've seen higher, I've seen higher. 6.8% mortgage rates, not that high. 5% treasuries, not that high. So the result of having said that, the reason I say it is because I don't think it's really slowing down the economy that much, and people get used to it. Even if it was higher, people would start to play around. They'd find ways to get around it. And as we've reported on this channel over and over again, only 2% of small businesses, when polled, said that they even need a loan. And I just listened to Jamie Dimon. Jamie Dimon doesn't think that the commercial real estate thing is going to be a problem at all. I mean, he says it'll be spotty. There'll be some banks that might get hurt by it, but basically he says, no, he says these folks that own these office buildings, they'll figure it out. They'll come up with a way.
Why did he sell stock?
I'm sorry?
Then why did Jamie Dimon sell his stock?
Well, I don't know. He didn't say that. He didn't talk about his reasons for that, but he did say he thinks that the regional banks will be fine. Not that there won't be another loss or two, but he thinks that will be very regional, as all, of course, real estate is. So anyway, I saw this article today from Business Insider, Larry. I wanted to get your take on this. So this is from Jim Bianco, the head of Bianco Research. He says, I was in the 0 to 2 cut camp at the beginning of the year. So the Fed was talking 3. He was lower than that. He thought it'd be only 0 to 2 cuts. And now he says he's down to no cuts for right now. He says, I don't think there's going to be any cuts at all. He says that's because as high as interest rates are, they're not doing much damage. He says the old adage on Wall Street is that rates go up until something breaks. And I would argue that at least on the rate side, we really haven't broken enough yet to do the damage that everybody thinks. This is his comment. Bianco noted that while there have been a few cracks, like in commercial real estate, the economy mostly seems to be doing all right. Further, he said it was able to get through 10-year treasury yields exceeding 5% in October, and it stayed relatively strong with the Fed funds rate in the 5.25 to 5.5 range. Rates have a way to go before we get to the hurting spot. The high rates haven't dragged earnings lower either, with 78% of the companies beating expectations by a median of 7%, according to Fundstrat. Recent economic data also supports the idea that elevated rates haven't hurt. In recent weeks, the U.S. has seen strong GDP growth, job numbers, consumer spending, inflation has been hotter than expected. I question that one, which has challenged the urgencies of Fed rate cuts. For the Fed to lower rates, Bianco said, officials are looking for an economy that is unmistakably weak and an inflation rate of 2%. Neither seem to be playing out right now. If anything, it's the opposite, bolstering the case for higher for longer interest rates for 2024, he concluded. Thoughts?
The problem with, predicting the future is it's awfully difficult to predict the future.
Very difficult.
I couldn't agree less. I don't think the economy is doing that great. I think there are some people hurting really badly. He did point out that commercial real estate's not doing so well. I mean, to put it mildly, and then, we've talked about this problem about labor, whether there's a labor shortage or not, whether everybody who really wants to work is working. Jamie Dimon said he's not sure there's going to be a soft landing.
That's true. He said 37.5% chance that we don't. So how did he say it? He said he said most people are saying 75% chance of a soft landing. He said cut that in half. So he thinks only a 37.5% chance of a soft landing.
That's a small chance. That's a relatively narrow window to go through.
Yes, it is.
I see a lot of people trying to persuade me against my sense that a recession is coming. And I find myself thinking, oh, maybe I'm wrong. Maybe I'm wrong, And I hear what you say, and I hear what this Bianco says, and I, listen, and I, listen to some of these podcasts and then those podcasts and this expert and that expert. I don't like what I'm seeing. And this is an election year.
Yeah.
It's happening in an election year.
Shouldn't be so uncertain in an election year, huh? Well, I saw one report on CNBC just a few minutes ago, and I can't tell you who it was that was speaking, who talked about that a big piece of the spend right now is going to groceries. And that because we've now eaten into those the monies that we've got from the pandemic, people are, and the grocery prices are not going up as much as they were, but they're still up there. That a higher percentage of the budget is going into the groceries, and that is hurting things like refrigerators and rugs and even clothing. He said even clothing and things of that nature. So if that's true, and it keeps, and I would assume that's also services that are, the kind of services that you can make a decision yes or no on. So this could be where the problem would be, is just not enough dollars to go around at this point until we until people's income catches up with those prices at the grocery store.
Yeah, and if we see wages rising significantly, will that trigger even tighter monetary conditions? And do we get into a bit of a spiral? That's the problem with these economic predictions, is that it's extremely difficult to balance these equations. And our numbers are so poor. Our data gathering is so, talk about antediluvian. The data gathering is just guessing for the most part. It's pure, quantum analysis, some sort of quantification based upon, and I don't even know if they do really good, math on it. All I know is this, that they've never been right.
Yes, right, exactly. Yeah. When you look at something as easy, that should be as easy as figuring out the the percentage of people that are working, and they're using surveys on both of those reports in order to get their numbers. And their numbers have been off by 35% month after month after month. It's pretty crazy. Well, on the other side, an industry that has pretty dang good numbers is the housing industries. And supporting the idea that interest rates are not that high, new home sales stats were out earlier today. New single family home sales logged a seasonally adjusted annual rate, 661,000, up 1.5% from December's revised figure. Wasn't as high as what the economists were expecting. They were expecting 690, so it missed that 690 by a lot, but it was still up compared to December. The median sales price of new houses last month came in at 420,000, up from 413 in December. So people are still out there buying those houses, Larry. These are now new homes.
And December was surprisingly high, if I recall correctly.
Yeah, it was. December was nice.
So, having a number like that in January seems pretty good. Look, this is what makes, economic forecasting so difficult, and it's being particularly difficult right now because so much uncertainty, there's so much skewing of the numbers due to the pandemic that the level of uncertainty has risen quite dramatically. We had standards that we could measure against, and those standards have all been destroyed, and we're busy recreating them.
Yeah.
We've got all the old guys like me retiring or dying off, and this is a huge generation.
Right.
With the baby boomers. It's a huge impact on the market.
Yes.
I've been looking at labor participation.
Yes.
And I guess this is a broken record. I always talk about it on the show, but labor participation is at a very low level. I mean, when we were doing so well in the late 80s all the way to the 2000s, despite that recession in George Bush's term, it was like Goldilocks, economy, because the labor participation was so dang high. Now we've got this low labor participation. Anyway, I always say that, all these immigrants coming in through our southern border, as bad as it is, and it's really terrible, but they may actually make up the difference for us ultimately.
Oh, well, there's absolutely no doubt that we need the immigration. I've never been against immigration ever. It's only a matter of the percent. How many do you want to let in, and how many, and do you want to choose who you let in, as opposed to just saying, come one, come all? That would be a little better thing. Well, back to the housing thing. We also trained people, Larry, over the last 20 years. We've trained people that you can refinance your mortgage. So when people go out to buy that house right now and they're looking at 6.7 or whatever percent, first of all, the seller might buy down that mortgage to the fives. Second of all, you can buy down that mortgage if you want to. If you've got cash, you can buy down the mortgage into the fives or even the fours if you want to pay enough in the beginning. And then, all right, I'll pay the 6.7% because 2 years from now, I'll refinance it if it's even down a quarter. If down a quarter or down a half, it makes it worth it to refinance. So we've been trained in that. I know people that refinance their homes 4 or 5 times during the 2010s.
Yeah, but you have to have the deposit. Today, you can't get away without having that deposit. So you have to have the deposit for a start, which means you have to have savings, which means you can't have huge student debt. There are, the student debt thing, we've never spoken about the student debt thing, but it's a huge overhang on our economy. I mean, a huge overhang. This notion of student debt, which has driven up, tuition by an enormous amount. There are scholarly studies that say, no, it hasn't done that. What bull? What baloney? I mean, I think that if I were dictator for a day, what I would do is mandate the absolute maximum size of a university administration for a given number of students. I would just make that. And overnight, tuition would fall by 1/3.
Yeah.
what I would do is forgive everybody's student debt by a third to two-thirds, and I would confiscate the endowment, a third of the endowment of these universities, because that is stolen money.
And then another thing that could be done, Larry, is you could make universities. So right now, one of the ways that Biden is giving back money is by saying these people got degrees that were worthless. They were from colleges that were worthless, et cetera, et cetera. Well, that's not that hard. You can have some real good KPIs on the value of these degrees, on the values of the various colleges, on what kind of result that the graduates are getting from those colleges. And not not let these students get themselves into debt on a degree for basket weaving.
It is such a scandal. Obama, in his wisdom, decided to nationalize the student loan business.
Right.
He said, we're going to cut the cost of doing student loans by, I don't know, he gave us some very large number. I don't have it at hand because I haven't prepared for tonight to talk about it. But he did all this, and all it did was, turn into supercharge this whole process of the government, handing money to administrators to hire more administrators to add more expense to education. If you actually pare down the pure educational focus of the or function of the university, you could provide university degrees as good as the best university degrees in this country for a third of the price, at the most two-thirds of the price, depending on the university and depending on the level and so on and so on. But all he did was nationalize the debt. He turned it into our problem. And now this administration is saying, we'll forgive it all. We'll just, wipe it off, start over. Well, all that'll do is the new money they pump in will raise the cost of tuition yet further.
Yeah, yeah. Well, you've got a for-profit. Well, it's actually technically a nonprofit school in Arizona. It's very famous. It's the largest Christian college in the whole United States now. It's Grand Canyon University, and the tuition and room and board together at that university without a scholarship is $20,000 a year.
But there are schools in this country that will not take government money because they don't want the government's mandates imposed upon them, and that charge very reasonable prices and give an outstanding education. So it's possible.
Yep.
And I'm not religious, and I'm not right wing, I'm not left wing. This is the biggest scandal of the last half century, what we've done to secondary education in this country, because that was always the shining light of our education system.
Well, fortunately, our university system is still by far the
most. I don't agree with that anymore.
All right, okay.
I do not agree with that anymore. I think that
I suppose you'd be talking about, you have to average and talk about all the bad stuff with the good stuff. I suppose what I'm saying is, if you want the top universities that the top students want to go to around the world are still here. But overall, I get your point. Overall, the quality is definitely nothing like it was.
I think the top universities, the quality of the top universities have fallen drastically. The quality, particularly the liberal arts.
Yeah.
The sciences, I think, have been somewhat protected, but some of them have been infected as well.
Sure.
But, this is a political issue. Everyone's
yes.
So I'm going to get off the subject.
Okay. All right. Let's go on to find out whether Tesla managed to hold on to those gains today. Wouldn't that be nice? We'll look here in the after hours, and it turns out that Tesla in the after hours only down 23 cents. So it held on to $7.20 of that $7.43, Larry. So that's not bad. We'll see what happens tomorrow.
There was a significant buyer in the market early today.
Oh, okay. So there's large volumes moving.
Yeah, just early in the day, there were some very large volumes is a significant buyer. It'd be interesting to see who accumulated this, So yeah, it's good.
Kathy had already bought a lot, so I'd be surprised if it was Kathy at this point because
Well,
she bought a hand over fist for a couple of weeks there.
yeah, and maybe they had a good inflow. I don't know. It's hard
Right.
to.
Okay, on the 10-year bond, we are down 1.6 basis points in the after hours. 2-year is about the same, down 1.2 basis points, but the 2 months and the short terms are all up. I was looking at this earlier. It's over 4%. I mean, over 40 basis points now on the 10-year compared to the 2-year. So the inversion continues to be as strong as ever, and still no real relief in that inversion. Any thoughts on the bonds there?
Well, they say that I heard over the weekend that over last weekend that the classic recession starts after the inversion ends.
Yes.
Inversion is the predecessor of the recession, but the recession only appears when the inversion ends. So as long as we stay inverted, we're all safe.
Now, and then there's the question though on whether, what's causal. Is it which is the horse and which is the cart? So it may be that it's the interest rates coming down as a result of the recession ending, or it could be that the inversion change being changed is somehow because of the banking system, the Fed or the Treasury, offering their different kinds of bonds that cause that to happen, which then anyway, there's some question about which is first and which is second if in fact it's true. So
And every recession is different.
no, who said that? All right, let's see here. Let's look at the rest here. We got the oil still in exactly the same place. It's been so tightly, right around 77, 76, 78 for quite a while now. Natural gas down a little bit in the pre-market. Well, 2.41%, that's not a little. In fact, it has been so volatile.
It saved Europe.
Yeah, yeah.
I mean, I guess the weather saved Europe, but result is natural gas costs nothing. I mean, so much for Russian oil.
Yeah, but they seem to be doing fine. I've seen how many articles recently saying that the all the pressure we've put on Russia, they don't seem to be having that much trouble with their economy.
Russian people are in trouble.
Are they? It's worse than it looks like.
Citizens, I mean, it's not great. It's not great. You know, you know what interest rates are in Russia today?
Oh,
Oh, they're double digits.
oh, wow. Okay.
More
Yeah.
than life's tough in Russia right now. Very, very tough.
The dollar is unchanged, Larry. A couple of people today saying they expect the dollar to be coming down as we go throughout the rest of this year. That would be recessionary. So we'll see what happens in that regard. Gold, exact right again in the 2040 range. Been there a little bit under, a little bit over, but not much happening there. Copper is at $3.82. By the way, I read today, or it might have been yesterday, I think it was this morning, that yes, it was, that the overall commodities index, the lowest point since 2021.
That's recessionary.
That's recessionary.
But this speaks to the theme that I started this conversation with, and that's, we're coming to the end of molecules.
Yeah.
We're, moving into this world of electronics. And so, we've seen commodities really come down in real value consistently over the last 20 years. Consistently.
Right.
So maybe the rules have changed. And maybe this is just a long-term, slow burn. We don't on this program look at Bitcoin, but Bitcoin's back up. It's over 50,000. It may even be over 54,000, maybe getting to
about 54,570.
Good for you. Probably means it's all going to drop tomorrow, but but Bitcoin is it's an indicator of a different world. People say there's nothing to Bitcoin, and the question is, what's in a dollar bill? What's the value in a dollar bill? People get a little bit tongue twisted when I ask them that same question. You know, what's behind Bitcoin? And I say, well, what's behind this piece of paper? But
Well,
okay.
the full faith and credit of the United States government and all of its land, all of its buildings, all of its people, all of its
Really?
all of
We,
its GDP.
who do you go to get that?
Well, you don't, but if it collapses, Larry, the rest of the world is going to be in such a world of hurt. It won't even.
It still doesn't explain what a dollar bill, how there's value behind a dollar bill. Because we're getting into,
Yeah, yeah, they're getting pretty esoteric here.
all I can say is that I buy the argument for Bitcoin. I buy it. And
I buy the concept, but I do still have the problem that we were just discussing, which is what happens if everybody decides tomorrow it's worthless, or enough people decide it's worthless, or people just
well,
say,
look what
"Oh, I
happened
made
to
enough money."
look what happened to the Argentina. It's a peso, right?
Right,
Look what happened to the Argentina peso.
sure,
It's worthless.
right.
And now it's worth something.
Government. Yeah.
Anyway,
All right. A pre-market. We've got the Dow down 21. We've got S&P down 3 and the Nasdaq's down 1975. And that would be 0.05 for the Dow in percentage, down S&P 0.05 the same, and 0.11 for the Nasdaq as far as the futures are there. So not a lot to go on for tomorrow, except kind of a softness as we go. But we got the PCE coming, Larry, on Thursday.
yeah,
So
yeah,
a lot
well.
of people, I think, are pretty spooked about that one.
So I have a question.
Yes.
Amazon joining the Dow. Does that pump the Dow or does that destroy Amazon?
I've seen the headlines today, Larry, and I didn't have a chance to think it through or to read the articles to find out what their position was. Um, uh, yeah,
Because almost every stock that's ever joined the Dow, it's been like a death sentence. Yeah.
it's like becoming man of the year or whatever. Some of those things like that. Yes. All right, Larry. Well, I think we've done it again. We had a lot of good news for this Monday afternoon and or evening for you. And so if I don't talk to you before or we don't get you back on the show before, we'll do it again on Friday, and hopefully we can bookend good news at both ends of the week.
Wouldn't that be nice?
All right, Larry, thanks so much for co-hosting. And to all of you out there, it's been great talking to you.
Thank you, Randy.